Hi, everyone. TGIF. Hi,
Morning, Dale.
Alexander, Richard. How are you guys? Paul, Kareem, Hugo, the whole community. Hope everyone had a good CPI day. Hey, DJ, Ronit, Jatine. So the sell from 61.8 in silver worked out pretty good. I think silver has to hold here. Or I think we're going to be looking for the potential of a breakdown. You know, there's your daily. Gold silver ratio was under pressure early and came back, and perhaps we're going to make one more high up here on the way to the bottom. And who's here with the team?
Good morning.
Hello.
Hey, how are you? How are you guys? So pretty wild day yesterday.
Fun, ain't it?
Yeah, it was kind of vicious at the beginning after the number. Especially, I mean, look at gold after the number. Well, I'm not showing it now. Anyway, it was whippy. I mean, we had a couple reversals within the same day.
Yeah. I think it sort of went as you might expect. You know, we got the initial move higher in the dollar on the numbers, and then all of a sudden, that's it. Everyone priced in 50 pips instead of 25, and bang, we see the reverse. And then we see the reverse of the reverse. Central bankers galore coming out and pulling rugs. You know, Bullard came out last night.
Yeah.
9 days after saying that a 50 pip hike wouldn't help the Fed, he's now saying he's backing a 50 pip hike. You got the guard coming out saying that rate hikes won't help the situation.
She's right.
Yeah, she's right, but
yeah, that's their only tool. They only have a hammer.
In the space of a few days, he's gone from we're potentially hiking to hikes might not make any difference anyway. And to me, it's incompetence across the board from these central banks at the moment. They're panicking. They're running around with their pants on fire because none of them saw this coming. I mean, one thing I pulled out the Lagarde story last night. She said no one could predict, and everyone was in the same boat. No one can predict what happened to the oil problems and the oil supply market. What happened with supply, 2 years ago, whenever it happened, when oil dropped to 20. No one could predict that. So no one could predict the inflation to come from that. And then in the next paragraph, she says, well, we watched oil rise from $20 to $90. Well, how could you not think that inflation wouldn't come when oil rises from $20 to $90? They don't know what they're doing. None of them know what they're doing, and it's going to get messy because the market's going to start thinking they don't know what they're doing.
Yeah. Yeah, so the credibility of all central banks on the line here. What do you think, KMan?
I have never ever seen, I think, of what I recall, so many changes of central bankers in a week's time. That I don't think I recall such a period.
It's like unprecedented, and you're like me. We're not real young anymore, so that's good that there's a lot of history that goes behind that statement.
Say something one day, say the opposite 2 days later. I don't know.
They don't know.
Even quicker than that, wasn't it? Last week with the Bank of England and the ECB, say one thing in the statement and say another thing in the presser.
Yeah, but I mean it's pretty crazy. So for the trades itself, the trading itself, I think so far we have to just say we are in ranges until they make up their mind, perhaps.
Yeah.
Quickie on
was this a stop hunt in everyone's waiting for a 115 breakout, and we just took out stops here and before it reversed lower?
I missed a very good trade. I was even short up there at 114.87 in the room, and then it wouldn't go anywhere. I step off the desk for dinner, and then
don't you love this?
Bullish Bullard comes out and sends it back into lower. So and I wasn't short anymore. But I think we are in a bit of a range. But I would say take away all those comments. Fed is probably going to hike first, before ECB now. I think the euro will really need something to break above that 115. So I've been saying it this week. It's really going to be a big level, and it's getting a bigger and bigger level, in my opinion.
So, one of the easiest and one of the best sell signals was from Stel. He said, the minute that we get to 2% in yields in the 10-year, which, we went to 203 or so, you sell the S&Ps. And I think while that was going on,
I hope
we were still up.
did it.
Yeah, we were still up around 4,600.
It
was
45.50 was.
No, we were higher. Remember, Stelios, we were talking, was it in the room? It was around 45.85.
Yeah, you're right. I did it around.
If you want to give into your FOMO, sell tiny here and then see what happens. Eh? Never made it up to 46.
Yeah. Anyway, look at what it's holding, the 50-day on this pullback, which is what it held Friday on the pullback. We take out today's lows later in the session. I wouldn't want to go home long.
No.
So, the yen, you guys think it has enough juice to finally get to my line up there above 117? It really hasn't done anything wrong yet.
No, it's holding well. Dollar yen is holding well, which is probably due to the dollar and what the BOJ said about them wanting to cap the 10-year JGBs at 0.25%. The yen crosses is a different issue, in my opinion. That will depend on the stock market. So the dollar yen is one thing, and then we need, I think, to dissociate a little bit the other crosses. We've seen breaks in Aussie yen, Kiwi yen, really breaks yesterday. Remember we were talking about
100 pips.
Just to get absolutely hammered later on in the day. So on the crosses is a completely different issue than dollar yen, in my opinion.
Yeah, see, nowadays we've gotten so used to low volatility that we'll call 100 pip move getting smashed.
Yeah, but it's
what I mean?
Yeah, but they did create quite big false breaks, both Aussie yen and Kiwi yen especially.
And here's Aussie yen, looks like it wants to reverse and go the other way again.
Yeah.
So put on your whipsaw, your whiplash collar.
Yeah, low as well. The RBA's low as well was out last night.
Yeah,
he did the same thing. In one interview or Q&A, he went from wages are going nowhere. Don't expect too much. And then 5 minutes later, he said I can't deny it's still possible we raise rates in 2022.
Yeah.
I'm going to call him RBA's low because he just makes me laugh. He's been a clown.
What a central bank mess we had this last week.
Okay, so we make the most out of the messes, and we're wrapping up things. I don't know about you guys. I don't do a lot of initiation of trades on a Friday.
I think the key to do.
I'm old and tired.
But tell me about it. I think the key to do is, you look at we've had a lot of volatility during the week, but take a step back, look at the wider time frames. Where have we gone? Yeah. Dollar yen held the high in January. Euro dollar held the 115. Cables holding 135. Aussie dollar, again found resistance up where it's found resistance before into 72.50. Now it's holding 71. You look at the old ranges that have been playing out for months and months, and there's not many that have broken. So for all the noise, we're in the same boat we were last week before, week before that, with few exceptions. So trading wise, we have the confirmation that levels are levels, and they've stood up. So we look at what to do with them next. If we get another run to 115, you've got to be wary about a break. You think it's a solid level, fine, sell into 115, but perhaps look for a stop reverse, 115, 15.20 if it breaks. Because
good idea.
If it's going to get tested again, the more times the level's tested, the greater the chance it's going to break, and the greater that break may be. So, there's only two things you can do. You can buy it or you can sell it. And you can position yourself against big levels both ways. And if you get stopped on one, and reverse it and it runs, well, you make your money back and then you make some profit on top, hopefully. But just
this 96 level looks pretty important in the Dixie.
there we go. So another level that you've been highlighting for a while. Take a step back if you want to review what's going on.
It held the 50-day too, so under this week's lows, there's a lot of space, at least back to the breakout level.
Take a step back, look at your levels next week. You know where you're going to lean against.
Yeah. What do you think the pain trade is? One more high in the dollar? Because everyone's waiting to declare the death of the dollar for decades. So every break, this is the one. This looks like it could have been, but also I could see one more shakeout of dollar bears.
Yeah, it's possible.
Perhaps when they really start to raise rates, perhaps.
No. There is some talk of an intermeeting hike.
I think that's
have you guys heard that?
I'm sure
that's getting a little crazy.
Sorry, you know what else is crazy? We're pricing I think it's a 60% chance of a 50 now in January.
That I think is still way over that's almost peak. I mean, it's crazy.
And also we're pricing 160 basis points for this year. I was looking at Fed fund futures, and that's pretty much what they're pricing.
Goldies have joined the bus. They've gone for 7 hikes this year, which is one less than JP Morgan's 8 hikes this year. It's all getting out of hand. But even with all this, as I said, we're not breaking new levels.
Well, and that's the point I want to make is that the market is pricing this in. And if you are, there's a couple things to think about. If you are a stock market bear and you're like, oh my God, stocks go down when rates go higher. It's all priced in, right? As Ryan, you just pointed out. And if you're a dollar bull, you got to be thinking the same thing. Like, this is not new news right now. I mean, I just bought some Aussie dollar about 10 minutes ago. And it's, pushing up towards, new highs on the session right now. I mean, it's like, dude, if it ain't going to go down, it's only got one other direction to go, right?
Yeah. And there's also context.
Tagged your line, Blake, yesterday near the high because I know these are your lines sometimes, even though we have different. I leave your lines in.
I'll show you what I'm looking at in the Aussie dollar here. Let me go ahead and get over there.
Yeah. But it's all about context as well. There's a difference between a dovish central bank who's been dovish for years turning hawkish, and there's a difference between a central bank pricing or expectations pricing the difference between a 25 pip hike and a 50 pip hike. It's complete size difference. Pricing, whether they're hiking 25 or 50, in the grand scheme of things, it doesn't really mean a thing. You look at CPI, just quickly look at CPI. Euro dollar going into CPI was 114.30. We've had all that noise and we're at 114.09.
Yeah.
For everything that's gone on.
Real quick, I'm sorry, David in the chat room. And by the way, David is David's in the chat room. He works for an analysis group that a gentleman, I forget his name right off the top of my head. He's on Real Vision all the time. And David's actually been on Real Vision, I believe, as well. He's in our chat room. He was just saying some chatter about the Fed ending QE today, possible headlines around 9 a.m. Eastern. That's some chatter. And he also mentions that would be risk off. Of course, that would be risk off. Or the knee jerk would be risk off. I don't know if that would be the case. What do you guys think if the Fed ended QE today?
I think there's something planned to be published up today. Anyway, is it 3 p.m. Eastern time? Magix was talking about that earlier in the other room.
Yeah,
so they are having meetings, right? They are having regular meetings. So there might be something. Then the market was already thinking that they might do something specific today. I'm not sure we're going to get anything really specific today, but there might be something planned there. All right.
Yeah. So as you guys can see, these are the chat rooms, and this is the macro Forex flow room. We're going to call it the macro flow room. That's what KMan was just discussing. And in the general chat room, yeah, this is what David was just talking about, that there might be some chatter about that. So it's interesting. And by the way, if you guys, get in the chat room, you have to be a premium member of ForexAnalytix. So try us out. It's $1 for 10 days. So you can jump in and get in the conversation. So I mean, well, let's go back to the conversation about a rate. I mean, an intermeeting or in between meeting rate hike. I mean, do you guys buy on that? I mean, Stelios, what do you think?
Intermeeting rate hike. Why is my question? Why?
Yeah, I mean, are we in a crisis? I mean,
we're a month away from March. If they really want to do something, you can do 50, which they won't. But
everybody thinks that we're going to see peak inflation this month or next month. So if it's February and we get the February numbers in March, everybody thinks that the peak is going to be like right here. So if the market feels this way, why is the Fed going to get ahead of that and say, well, we're just going to raise rates right now?
If they move, it's panic. It's pure panic. I don't know what the market does with that. I don't know if it's risk off.
How is a rate hike? How is a rate hike going to cure some of the problems like oil prices? How is a rate hike in the US going to bring oil price down? It's not. So it's not. Right. How is it going to bring supply better to the markets? It's not. So I don't see any reason why to do that now. That will show panic, and they don't want that.
Exactly. So we were talking about the euro, but more importantly, let's just talk about the currency intraday volatility that we're seeing. If you guys think that FX is dead, it's far from dead. And I'm going to say this, as we've been saying this, the last few months, this is the year, and moving forward is going to be the years for currencies. If you're not trading currencies, this is where it's at, because when interest rates are moved, when expectations are moved, when people are just jostling back and forth trying to figure out where rates are going, guess what's going to be moving? Currencies, and it's going to be volatile. And that's what we saw yesterday. It may not be to your liking, and it may not be exactly what you're looking for, but we are seeing some volatility, and that's what traders want. So welcome to the jungle. All right. So
I love that song.
Yeah, I know, me too. I think that was the last concert I went to was Guns N' Roses. When they were
used
live.
To play that during webinars. It's a great tune.
I'm seeing them this year.
Go ahead, Ryan.
I'm seeing them this year.
That's awesome, dude.
They're supposed to play 2020, but obviously the virus put pay to that. And,
dude, the set went on for I think their set went on for literally 3.5 hours. We thought it was going to be 2 hours, and it was a weeknight, unfortunately. I think I got home at 1 and got up at 3:30 to do the Morning Edge or the F.A.C.E webinar the next day. Yeah, some of you guys might have remembered that. Anyway, dollar mex, we had a really nice bounce off of this. We were talking about this Gartley pattern. We reversed pretty aggressively, challenged the underside of this trend line, and we've come back down. And take a look at these emerging market currencies. They suggest that we are going to see a bounce back in the S&P. And I mean, when we're talking about range bound in the S&P, let's not ignore that. Intraday we're holding above that 4450 in the S&P. Resistance is at 4592 is the 618 retracement of this entire move. We talked about the importance of that. I mean, I'm going to just go ahead and go out on a limb and say, we get above here, we're going to squeeze the hell out of the market back up towards 4,800. And if we get down below here, we're going back to revisit the lows. Yeah. And between now and then, you're probably going to hear a lot of crap talking, a lot of wishing things were going to happen. But, we are really in a range, right?
Yeah.
I mean, so let me ask you this, you guys. Stelios, what are you looking at right now? Because we have gold creeping back up towards that 1830 level, 1850 as everybody knows is resistance. Are you doing anything with precious metals?
No, I am. I did put out a short pattern play in the S&P yesterday.
Yeah, great call, by the way. Great call.
45.50. I am a little bit worried because I thought that with what's priced in, equity should be lower. So I've moved my invalidation to basically the entry level, but it's it's gone well. I still think we should be selling rallies in risk. The metals, I'm scared. I want to go long. I'm not going to short metals, and I'm scared to go long here, so I'm not touching them.
Well, I was pulling up the chart of gold, and I mean, this pretty much tells us the story, right? I mean,
yeah,
this is, and let me get rid of this blue line here. This is a symmetrical triangle, and we are in the apex of the wedge, and the intraday price swings right now are absolutely brutal in gold. I mean, you could be, oh my God, I'm getting long, and then get your butt slapped. And then you're like, okay, it's breaking down. I'm going to get short. Then you get your butt slapped the other direction. That's going to happen when you're
ridiculous.
It is. So when you get above 1850 or you get below 1780, that's probably your cue that you need to be, directionally buying or selling gold. But until that happens, yeah, nothing. So let's shift over to Ryan. Ryan, what are you thinking here? I mean, let me ask you this. You got the sterling. I was talking with Simon last night in our chat room. It was kind of late at night, but it was my wife's 50th birthday yesterday. So, I was about ready to wrap up to go have some cake and some wine. And he was saying he short the sterling because, net short sterling because of Boris Johnson, possible no contest. But is it really bearish, the sterling? Should that happen?
That's a good question.
Yeah, I mean, that's what the question we should be asking. Like, look, you pull him out of office and shoot, I might even buy the sterling. What do you think here?
No, a no confidence vote is not overly bearish. It may be a bit algo bearish on the initial reaction because markets don't like uncertainty. But as I've mentioned before, the likely favourite candidate is Chancellor Rishi Sunak, who would be pound positive because he's very pro business, investment, that sort of thing.
Then I'm buying the sterling. Then why shouldn't I buy the sterling?
If you get a decent knock in sterling, then on that headline, then
okay,
definitely a fade in my opinion. I'll be looking to buy it myself. Where you buy it against is the question.
That makes sense. So you get the knee jerk. Oh my God, it's a no contest vote. Everybody's going to lose confidence in the sterling. You get this spike down. You get a knee jerk reaction. Let me grab a real line here. You get this knee jerk reaction lower, and then you got to just be ready to turn around and be long, right?
Yeah. Exactly.
Something like that. I KMan, since you're in the UK as well, do you have any opinions on the sterling in that type of situation?
In that type of situation, no. Well, as Ryan says, probably the knee-jerk reaction, and then I'm actually a little bit short euro sterling again. I think it's just a fact. There's still some CB divergence in there, and regardless of what Bailey might say, they're still hiking. So I think we're slowly going to. There's a chance we slowly drift back lower on the euro sterling right now, and on silver, as Stelios was already talking about those levels as well. I think we're just inside that range, right? 22 to 23. What is it? 50, 60s.
Yeah, silver is about as big of a disaster as it comes.
To my existing, and then let it go around those 23.50s as I said in the room, and now I'm just waiting to see what happens.
Yeah, I mean, I'm pretty adamant about not touching it while we're here. Yeah, you got to see how it acts below 22. Closer to 21.50 is probably better because of this so many spike lows down here. I mean, that's going to be real supportive. And then
people will get real bearish under there.
Look at this 200-day moving average. It's hugging this.
Yeah, that was a brilliant one.
That's where it's going.
Yeah, and then I agree with Stelios. There is a risk it comes. It breaks down first before going up again. But the facts are we are in this range. So as long as it's in there, respect the levels, right?
Yeah, you gotta totally respect the levels. What's interesting, and
we have ranges everywhere, Blake.
There are
silver everywhere.
So I'm gonna tell you guys, give you guys a little secret with traders and in general. I spent 5 years and just trading with some of the really just some really great they're independent traders trading for, privately for a private fund, handpicked. And I traded with them every day for 4.5 years, basically. And, every question is the same. Like every question, it'd be like this. Hey, Blake, what are you looking at with the euro? I'd be like, blah, 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 blah. What's the levels? That's it.
Yeah.
What's the levels? That's all they need. That's all they're like, hey, you have an opinion? Great. What's your levels? That's it. They don't care. They don't care about anything else. They just want to know where your levels are at, because that's where you define risk. Period. End of story. And as a trader, we don't have control of much, but what we do have control of at all times is what levels we're trading against and what our risk is. So that's so vitally important. So when you hear us talk about like, what are the levels, trade the levels, that's what we're seeing. Okay. And that's what we're talking about. So hopefully that makes sense to you guys listening in, especially a lot of you new traders that are just cutting your teeth in the market. So
and also what I would like to add is that too many new or less experienced traders are always looking for breaks, but a market is 80% of the time in ranges.
Yeah, that's a great point. And speaking of which, Dale, you talked about this earlier. I heard you, but I hadn't said anything yet. You said, "Hey, was that a false breakout in the euro dollar, last night?" And I think it was just a range test. But look at the dollar index. This is really important. This was developing as a bear flag pattern. Obviously, Bullard really turned everything around. I mean, the dollar was literally we actually hit the 38% retracement. We were breaking down, and like Bullard opened his mouth literally at support. Like, I mean, that couldn't have been timed any better, saving anybody who is a dollar bull. Right. And I mean, I was, thinking, oh my God, we're going to, have this bear flag pattern. We're going to break down. But just take a look at the dollar index. I mean, how important that support was that held yesterday. So what this really means now, just going back to my previous comments about the levels, this is really critical support here at 95.15, 95.10 in the dollar index.
Agree.
It is. You can take all of these little lows right over here back in 2021. You connect them through the low right here in January of this year, and to where we're at right now. That's it. And while the dollar's above that level, you have to be very careful being on the short side, which I am. But we break below that, and if you're long the dollar, you got to be really careful, because that's when we start looking at dollars going to be at new lows for the year. So any final thoughts, guys? I know it's Friday, by the way. Tracy was supposed to be here today, but she's traveling. So Dale, she say when she's going to hop on with you again?
No, but I left her a message with some dates.
Cool. Well, Tracy, she is definitely a friend of ours and has been on with us so many different times. So if she says she's traveling around, she is traveling around. So, but any final thoughts to wrap up the week, guys?
Just back on the subject, talking about, looking at your levels, and that's what inexperienced traders should do. Absolutely, 100%. But, we hear a lot of traders who say, they're purely technical. And one of the reasons they say that is to cover the fact that they don't understand the fundamentals. And that's all right. You don't have to be an economist.
It's true. But
what you need, it's not difficult just to get which way the wind's blowing for anyone, economy, country, central bank. There's three things I tell traders to look at: what the central bank's doing, what inflation's doing, what growth is doing. And those are pretty much the only three things you need. And it just gives you a bias. It tells you which way the wind's blowing. If the Fed's in a hike cycle, then, shorting the dollar is perhaps the path of most resistance. So you trade accordingly with your risk.
So I want to give hats off to one of our traders in our community. His name's Bran. Bran spends a lot of time in the for the FFL, which is the Forex flow, which is we're going to change it to the macro flow room. And this is where, you know, a lot of those conversations happen, and about, you know, which way the wind's blowing. And, you know, I tip my hat to Bran, who is a newer trader, and he is in there, you know, all the time commenting, trying to understand, you know, why the whys rather than the, you know, if this, then that, I'm buying, you know, if this, then that, I'm selling. It's the, why is that happening? And I have to say, you know, I've seen the improvement just over the last several months in traders like him, Brand in particular, who's really trying to understand, you know, which way the wind's blowing. And if Ryan does fart, he's not downwind. I mean, that's the most important thing, right? So, you know, I think
you're 100% spot. I mean, Brand came and joined me in when I had the Forex flow room, and he won't mind me saying this at all. He was a complete noob. He made every rookie mistake you could make. He looked at markets every which way but right, and he's learned and he's understood that. This isn't you can't become a trader overnight. You know, this is a profession. You have to learn it. You can't just buy a pair of football boots and become a Premier League footballer. You can't buy a book on medicine and become a world-class surgeon. You have to learn this profession. And he's put the work in. He still makes mistakes. He still questions himself. I still see some fear in him when he trades, you know, but the difference between, he's been with us for 2 years now. The difference between when he started and what he is now is worlds apart. He's still on a long journey, and he knows that, and he's open to admit that. And that's probably the best trait. He knows when he's being silly, and he knows when he's doing things wrong, and then he adjusts himself and he takes a step back and he fixes it. So
Truth.
Yeah, he's the model.
Nice. Yeah. So anyway, Bran, hats off to you, buddy. And guys, remember, I was actually having a discussion yesterday with one of our broker partners, and you know, I said, you know, that's the beauty of ForexAnalytix is be below the surface. I mean, optics. When you guys look at ForexAnalytix, you're like, oh, look, they have a platform, great. But below the surface, below what you see here with the app, and you know, they were just like, man, there's so much information here. There's so many great charts and analysis and updates throughout the course of the day, and you know, all this other stuff. And I'm like, you haven't visited the chat room yet? And they're like, no. I'm like, that's the heartbeat of what we do, is our community. So I'm like, we don't talk about politics, we don't talk about religion. And, you know, we don't talk about Ryan's lack of hair or Stelios. And other than that, you know, game on, you know, whatever you guys want to discuss. No, I'm just kidding. We really just talk about the markets, and there's no one can sell anything there. You sell something, we'll remove you and blacklist you for life, and we'll ban you for life. You know, you try to sell a service, you know, it's only just, you know, we talk trades and we talk markets.
And as Brand just said there in the comments, you know, below the surface, it's the people you can talk to. And that's what the chat room is about. You know, you've got, you know, some of you guys in, you know, watching this, you know, you may just join us on Face and you can ask questions in there in the chat and whatnot. But, you know, we're there pretty much 24/7. You know, you can come and talk to us anytime. We're not on pedestals. No one's, you know, oh, you can't talk to me. You know, you've got a question to ask it, and someone will damn well answer it.
Yeah, that's exactly right. Well, anyway, I want to wish everybody a happy end of the week. I know I'm ready for the end of the week. You know, it is Friday and I'm excited about it. So, and remember guys, here, let me go ahead and put this in here. This is next Tuesday, guys. So I'm going to put this link to everybody. Right now, it just went in the chat box. Please go register for this webinar. We got a huge announcement. We could quite possibly change the way you trade the markets forever from this day forward. From next week forward. Anyway, check it out. Make sure you're there. At least be there for the announcement, and you know, you can judge for yourself. what this thing we're doing. And I think it's going to be huge for a lot of people. So anyway, be there or be square. And for the rest of you guys and gals, have a great weekend. I'll film the week ahead video probably tomorrow. So I'll see you guys over the weekend on that video. And, for those of you that are in the ForexAnalytix community, I'll see you guys on the morning edge in about 40 minutes from right now. So
great work again, team. Thanks, Blake and Stel and Ryan and KMan and Grega and Andre and everyone for laying it all out on the court for you guys.
And to you, Coach, as well, and to all our followers and people who turn up to watch us.
Yeah, so enjoy the Super Bowl if you're watching it, and we'll know which way the stock market's going to go after the Super Bowl indicator. So we're going to fill you in next week on that one. Okay, so everyone, thank you for your support. The best way to say thank you is to join our family. And that's a wrap. Shabbat Shalom, Amira, and see everyone on Monday. Don't just count your pips, count your blessings. Adios.